I don't. So you have business entity, and then you have business taxation. So your business needs to stay as an LLC, but how your business is taxed, your business needs to be taxed as an S corp. So yeah, so and that form is form 2553. Whoever does your
There you
taxes,
go.
yeah, whoever does your tax,
2553.
yeah, so whoever does your taxes, they would just be able to change it. Now, unfortunately, have to make that. So for every year, you have to make that change by March 31st. So so that they can do that form now, the 2553, the tax form, but it won't actually take into effect until next year. But I mean, they might try to like a emergency move. Sometimes it works, sometimes it doesn't. But yeah, but the form to make the change is form 2553. But the reason why though, so the reason why is because so when I am a LLC and I'm taxed as an LLC, like Tay right now, I do not have salary. I just have distribution. So when you pay yourself as an LLC, the money is just coming to you. It comes from your business directly to you. It is no payment. It's called distribution. So money's being distributed from whoever pays you to your business directly to you as a person. So it's no middleman, right? So if there's no middleman, you're not able to take advantage of all of the tax incentives as a business being your middleman. But now once you're taxed as an LLC, I'm sorry, you're taxed as an S Corp. So you are still, your entity still an LLC, but you're taxed as an S Corp. Now is the middleman. So now the business pays your S Corporation company. And so now the middleman is your business. So now if you get paid $50,000 a year, now the business collects that $50,000. And then that business pays you, Alfonso, a salary of 25,000. Well, let's say 30,000 to make the math easier. So now from a tax standpoint, because anybody's a W-2, you know, you guys have to pay 15.3% in Social Security and Medicare taxes before anything else, between federal taxes, local taxes, state taxes. Everybody who is a W-2 employee has to pay 15.3% in taxes. Well, the cool thing is you don't have to pay yourself everything, because under the tax code, fair, reasonable, ordinary, and necessary. So the rule of thumb, and so as I think Ivan's popping in, so the rule of thumb, right? Some people do 50% of their salary of how much they bring in. Some people do 30%. I like to do 50 to make sure that you don't get audited. But the rule of thumb is you need to pay yourself a salary of half of what you bring in. So if you're S corporation, you make $50,000, you need to pay yourself at least half. So let's say 25,000. So now 25,000 of the $50,000 that you made, that's taxed at 15%. But the other 25,000 that you made, that's not taxed at all. That goes from your business to you without being taxed at 15%. If you're working for a company and you make $50,000, all $50,000 is being taxed. But if you're a company making $15,000 and you're an S Corp, from a taxation standpoint, you're not paying taxes on all 50,000, you're only being taxed on, in this case, 25,000. So that alone, same company doing the same thing, but just changing the structure of how you're taxed because you make over 50,000. That alone, 25,000 at 22%, that's about $4,000. So that alone means that you're going to get $4,000 back by just having them tax you as a S corporation and not an LLC. But I'm gonna take it a step further, because now with the big beautiful bill, as you guys may or may not know, I'm not a fan of Trump, right? So, but you know, it is what it is, though. He's the president, nothing we can do about it. But because of the big beautiful bill, he put in there QBI, and you guys, especially if you're a business owner, so Tay, write this down as well. QBI is called Qualified Business Income. Meaning, if I am in business as a S corporation, the money that I don't pay myself as a salary, the money that comes in my business, that is not salary money, I get to deduct that by 20%. So using the same example, I make $50,000 in my business, 25,000 I pay a salary to myself, and the other 25,000 I get to write off 20% of that 25,000 just because I'm in business. It doesn't matter what business you're in, DJing, consultant, construction work, manager, doing insurance. It doesn't matter what business you're in. Just because you're in business, you get to have that 20% deduction. So yeah.
So with that example, you say You say you have the 50 and then you pay your business is set up as like your middleman, like you said. And you pay yourself the 25,000
Mhm.
and the other 25, that's what's getting technically taxed. You would still have to claim like on a personal, the 25 ultimately is still lower than what you would be taxed from the 50 there, if I'm understanding you correctly.
Yeah, correct. Yeah, because because again, this thing of it, as I was a W-2 employee, all 50 would be taxed at 15%.
Yeah.
Now, since the business is the middleman, only 25,000 is taxed at 15%.
Gotcha. Okay.
Right. So yeah. And so yeah, so that alone just kind of saves me money because all 50 is not being taxed at 15, only half. And then to take it a step further, and it wasn't like this until 2 months ago when we signed the bill. But now take a step further, that money that was not paid as a salary, right? That's just like you don't pay taxes on or as a person.
Yeah.
I also get to deduct that by another 20%. So 25,000 at 20%, that's 4,000. That's another $4,000 I get. It's another $4,000 that I get as well, just because I'm in business. So like I would tell anybody on this call, start a business. And Tay, I got some juice for you too, Tay, because I know because your gigs, it's a way that you can everybody here. I'm gonna show you guys how to use your personal income as a business income. We're gonna go over that as well. But yeah, so anybody here, start a business. The IRS tax code is not for W-2 employees. It is for business owners. I have, and the numbers might be off, but from my experience, a person makes $100,000 a year as a W-2. They are paying the same taxes and they're bringing home, well, not the same taxes, but they're bringing home the same amount of money as a person making $65,000 as a business. So I could make $35,000 less and I will take home the same amount of money because I'm in business and have all those write-offs compared to a W-2 employee. So even if my business ain't making as much money as my two job, I'm still taking home the same amount of money. Or I got a W-2 job and I then start a business making, couple grand a year. All that now is write-offs that flows through my personal, which means now I get less taxes on my personal because it's ran through my business.
But let me ask you this though, Mario. Like, so say like you're going through all of those steps and you might be taking those losses, doing those write-offs. And I feel like I've heard it before, but is there a certain amount of times or years that they allow for that before they like, hold on, like you gotta start making some income? And if so, like what is that and what does that look like? And how do you navigate then around that?
Yeah, so no income again because of rule I said before, but IRS code 162, how you run your business is different than everybody else. So just remember, you guys can theoretically speak and do whatever you want to do as long as it's necessary, ordinary, fair, and reasonable in a pursuit of income. So it is no manual of how long you can have a business and not make any money. But theoretically speaking, it's 2 or 3 years. Like that's kind of the unwritten rule.
What's that 7 year thing though? I heard something about somebody. What's that 7 year thing?
That's depreciation. So
Okay.
so if I have a business asset, then I have 7 years to depreciate it. So let's say for you, Fonzo, you buy a piece of pressure washing equipment, and that
Right.
equipment that costs you $20,000. The IRS knows it's going to break down over time and you're going to have to spend money to repair it. So they say, hey, we're going to give you a tax deduction. Let's say 21,000, make the math easier. So 21,000, 7 years, so $3,000 a year.
3 apiece. Yeah.
Yeah. So every year we're going to allow you to take a tax deduction of $3,000 for 7 years because you bought this equipment. However, because of the new tax code, the big beautiful bill, you can do 100% bonus depreciation. And Tay, this is great for you for any equipment that you buy because you could depreciate in year one. 100% bonus depreciation means instead of the IRS letting me depreciate $3,000 a year over 7 years, I get to depreciate all
The whole money right away.
I get to depreciate all $21,000 in 1 year. So instead of getting piece by piece for 7 straight years, I get all that money back in the first year.
I guess. Thank you.
Yeah. Yeah. So okay. So Will. So that's that. So my next point. So anybody who is a W-2 employee, the easiest way. I mean, I'm just gonna say the easiest way is just to invoice yourself. So I would recommend have a Stripe account. Right. Some people use PayPal. Some people use Stripe. In my experience, Stripe is better because sometimes PayPal shuts you down. I have for two of my businesses, I use PayPal because I have to from an automation standpoint. Other three businesses, I use Stripe. I have not had any problems with PayPal yet, but I've heard other people have problems with PayPal. So use Stripe. Stripe is very easy. It doesn't cost. They don't charge you that much, but use Stripe. So you go to stripe.com and just open up a business account. It's called a merchant account. Well, then you have your structure we talked about. So you do your business. You either go to llcuniversity.com or talk to a CPA or a tax strategist like myself. Set it up. Then you set up your EIN number, and then Stripe will ask you, what is your business? You put it in your EIN number. Now you have a merchant account, which means now you can invoice a person or charge a person for goods and services. Well, if I'm a consultant, it doesn't matter what I do. I can consult on what I do. If I'm a teacher for 10 years, I can consult other teachers on how to make kids be good in the classroom. And I can do a business around that. I can tutor people. Right? So now I take my W-2 money, and I then, with my business, invoice me personally. And now that money that is in the same household flows from me personally into my business. And now I'm showing business income. So at the end of the month, I got an extra, let's say $1,000. That extra $1,000 I invoice me personally through my business. And now that $1,000 goes from my from my personal account to my business account. And it just showed that I made $12,000 in business income for the year. And because of my documentation that I have, it's justified. Even though I'm teaching, my business is teaching myself what to do, it's showing income. So now since I showed income, because I talked about before, all my bills at my house, because I'm running a consulting job. So in order to have electricity, I got to write off my electricity. If I have cable, I get to write that off too. So now all the bills I have is now a tax deduction because I'm running it through my business and I'm bringing in business income by doing that strategy I talked about. Anybody who wants to start a business, I recommend them do that first. Have that income coming in so you can start those write-offs so you can see, because if somebody tells you something and you don't see it, then you won't know. And you'll kick the can down the road 3 or 4 or 5 years later, you don't do it and you're stuck like Chuck in the pickup truck 10 years from now. But at least if you just do it with your own money, you're not doing anything. It stays in your pocket. You money moving from your business account to your personal account is still your money. And you can then move it back from your business account back to your personal account. That doesn't matter. It's your money. The money stays in the same household. It's not like somebody else is going to get it. But it shows you from a tax standpoint, wow, I got an extra $3,000 or $4,000 from a refund standpoint, or I didn't owe as much in taxes. So it just shows you it could be done. And with anything, once you go through an experience and you can see it could be done, then you're going to be like, okay, now what if I get more clients? Now what if I take this $4,000 or $5,000 of tax savings and then do marketing, pay for Facebook ads, market myself, and get more money coming in? Like that's how you grow your business, and that's how you go from being a W-2 employee to a small business owner. Like I want everybody to be an entrepreneur, but it's all in due time, right?